All right, we're live. So welcome back to Dapp University. So tomorrow is a major day for the Ethereum network. It's going to undergo a huge update that we've been talking about for months on this channel, the EIP-1559 network upgrade. This is the update that everybody's been talking about where Ether is actually going to get burned whenever new transactions are created. So we're going to talk about that today, what you need to understand. We're going to look at lots of other news that's happened in the space. There's a big infrastructure bill going through the U.S. legislature that's got, language about crypto, some comments about crypto from the SEC, all this type of stuff. Look at the cryptocurrency prices, answer some of your questions, and a lot more. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is financial advice, and there's lots of scammers down in the comment section below. Just ignore them. I'll never give you my phone number or ask you to invest with me. All right, so we got people jumping in the chat here. We got Automatic Beats, Culture Hives. We got Robin, Alan, Mikey, Anthony, Vienna. Welcome, CX, Right Gear, Mark. Welcome. All right, so let's go ahead and jump into this. So tomorrow we have a major network upgrade for the Ethereum protocol. We've been talking about this for months on this channel. We talked about on Monday this week, saying watch the Ethereum space this week because this is a critical moment. All right, so we have a countdown timer here. Originally, this was advertised as happening on August 4th. That's the date we've been talking about this channel. But how these network upgrades work is they actually do it based on a certain block number. And you don't exactly know when that block number is going to be. But we do have a pretty reliable countdown here. So it's going to happen at the current... It's going to happen at this block right here, which you plugged into a calculator, which we can see now is 22 hours away. All right, so basically by the time we do our live stream tomorrow, EIP-1559 will be activated and will actually be burning ETH whenever new transactions are created. That's the whole purpose of this upgrade. Well, it's not the whole purpose, but that's probably one of the biggest benefits people are excited about. It's designed to be a user experience upgrade for Ethereum with lots of benefits. It's going to make it better. It's better for when people are actually sending transactions. It actually can help with the gas fees, with the on-chain gas oracle, all that type of stuff. But yeah, this is our moment of truth. So, as always, when you're making a massive technical upgrade like this, it's sort of like a rocket sitting on a launch pad, and you're waiting there, and you're like. Everybody's kind of got their fingers crossed a little bit. You know what I mean? You're waiting for this rocket to take off, and you're like, yeah, this is going to work. But you always have this little bit of doubt in your back of your mind that like, oh, we'll hope something doesn't happen. So you can expect a little bit of that as this network upgrade is rolling out. Now, I have full confidence that this is gonna work. And even if there's anything that's even the slightest bit wrong, it's going to be taken care of instantly. Okay. But that's always something to keep in mind for these last-minute considerations because we've never really seen challenges like this where we're upgrading public blockchains that are securing people's funds like this to the degree that we have now, where we have these blockchains with massive network effects. So that's always something to keep in perspective. The last thing is I'm sure people are wondering, what's going to happen with the cryptocurrency prices? Nobody really knows what's going to happen in the short term. Long term, we do... kind of reiterate that this can have a positive price impact on Ether because it limits the supply. Well, in the very least, it reduces the amount of new Ether that's getting created every single block. And that will actually intensify whenever we move it to proof of stake. But assuming that people are demanding Ether, that the demand stays the same or increases, then it will have a positive price impact on Ether long term. Now, in the short term, we could be looking at a buy the rumor, sell the news situation where people are accumulating Ether ahead of time and then selling it once EIP-1559 goes live. As you know, if you've been watching this channel, I don't care as much about short-term price moves. I'm definitely watching this space for the long term, and the long-term benefit of EIP-1559 will be big. So, let me know what y'all think down in the chat below. Yeah, welcome. All right, so let's go ahead and look at a couple of things that are happening in the space. And also, I'll put the link to this in the chat here. If you want to watch this countdown, it'll actually calculate the block and then the estimated time before we reach that block. Okay, so let's. Somebody says it's already taking off. We can actually go ahead and look at the price. Let's go ahead and just start with the Ether price. Okay. So Ether, yeah, so Ether's basically reclaiming all the ground that it lost yesterday. So the entire crypto market has seen, a bit of a rebound. Ether saw all these green candles in a row. Saw a little bit of a correction yesterday, but it's making up for all the lost ground. So it does seem like there's some price action around this particular event. It's just too hard. It's just too hard to know what's going to happen in the short term. But like I was saying, long term, I definitely see it as bullish. So we can see this compared to the Bitcoin price. So Bitcoin is still trying to make up its mind, and I'm still in the camp where I don't think that Ether's just going to rocket off to infinity. If Bitcoin is still trying to make up its mind about what it wants to do, does it want to confidently break out of this range and get above $40,000 price level? Because at the end of the day, we have there are two more sort of bosses. You know what I mean? After this level, as confidently getting out of $40,000, as I've been talking about for weeks now, we've kind of been in this downtrend. You could count this as kind of a downtrend or a range where you have $40,000 kind of as a resistance point. 30 to 40. Of course, we got down like 29,000. So this is about $30,000 to $40,000. We got a little bit above, so like 41, 42. But I want to confidently break above 40,000 before we get too excited. And then, of course, get above all of our long-term moving averages before it looks like we're, all, really bullish. So to me, Bitcoin needs to look bullish. The entire space needs to get bullish before I get too excited about any particular asset in the short term, even including Ether. You know what I mean? Even with this massive network upgrade, there's just too many other factors, especially with market forces, to know exactly what's going to happen with price. So that's how I always feel about it. What do y'all think down in the chat below? Somebody says audit, super bullish on it. Welcome. Okay, so let's go ahead and look at some other things that are happening in this space. So one thing that came up yesterday was some comments from the SEC. So let me just pull this up here. Okay, so yesterday we got some comments about crypto regulations from the SEC. Let me just pull up my screen. So yesterday, the SEC chair was talking about crypto lending and more an expansive speech on regulation. Okay, so we're getting some clarity on this, and I'll share more of my thoughts here in a minute. I think people trying to impose some sort of regulations on crypto and how it works, and especially in the U.S., is somewhat inevitable. I think the fact that we're getting some clarity about what they want to do is actually kind of a good thing. I'm not saying I agree with all the regulations per se. I think the regulations are inevitable, and I would like to minimize the amount of regulations, especially as they pertain to letting people who want to do things in crypto the crypto way continue to do them the crypto way. But let's just look at some of the regulations that we're talking about. So the quick take. So SEC Chairman Gary Gensler spoke about crypto regulation during an event appearance on Tuesday. Okay, his remarks indicate the SEC is scrutinizing major trends in the crypto space today, including decentralized finance or DeFi, stablecoins, and more. So notably, he wants to see congressional legislation focused on crypto trading, lending, and DeFi platforms. Okay, so this is right at the center of a lot of what's happening on Ethereum. So basically DEXs, lending platforms. I mean, some of them would be centralized, so maybe like centralized exchanges like Coinbase, lending platforms like BlockFi perhaps, and also other DeFi platforms might include all those things like, DEXs like Uniswap or, lending platforms like Aave. So this could be a pretty wide umbrella here. So basically granting regulators additional authorities to regulate the crypto ecosystem. So this is where the reasoning gets a little funny here, or at least the rhetoric. So right now we just don't have enough investor protection in crypto. Okay, so this is the line that kind of always gets out here. So we don't have enough protections for people. So it's always safety and protection is the card that they lead with. When they want to change the rules here, because they want to have a reason that basically absolves them of any negative perception about what they're doing. Okay, so if you frame it that way, that essentially, it sort of dispels a lot of people's criticism out of the gate. But we know that one of the reasons people actually prefer decentralized finance or DeFi in the first place is because it kind of is a place where you don't have all this regulatory fat heaped on top of it that's sort of designed for people's protection. And that's what makes people actually able to innovate in it faster and actually do things and get access to products that most people wouldn't be able to, and get the kind of upside in finance that's mostly reserved for insiders. That's one of the whole criticisms of centralized finance or old school finance in the first place, and why people like crypto so much is because, crypto has been this really unique opportunity for, quote unquote, the little guy or retail investors to come in and get exposure to a massive upside on a generational opportunity before like the big banks and before the old money, before the big guys. Like that's an insane, shift in crypto. And the fact that we didn't have all this regulatory fat on top of it that's what, quote unquote, designed for your protection, it actually gave people who might even have modest means the ability to have quite large means to actually capitalize on that opportunity. And so I think some of the criticism of, heaping on regulation that's sort of designed to protect people actually cuts people off from significant opportunities. Okay. Now, that being said, the crypto space, you can get absolutely wrecked. Okay, I try to be 100% clear about that on this channel. With DeFi, you can get into the wrong DeFi project and lose all your money. You can invest in the wrong, cryptocurrency, microcap, altcoin, and absolutely lose your money. But that's where, education and all this type of stuff comes into play. It's a way more of a libertarian type space where the burden is on the individual to make good choices. That's the trade-off that you're making. But the upside of that trade-off is that you can get outsized returns and you could get somewhere else if you play your cards right. Okay. But if you bring in all this regulation and throw on the space, then you can actually take some of that opportunity off the table. And then you're going back and, making the system. Well, one big complaint people have about the other system is it's rigged towards the elites. It's rigged towards people who have money or, can become accredited investors and have access to all these products. And the accredited investor rules have changed over time. I forget what they are, always are off the top of my head. But essentially, you either need to have a large net worth or have a large income or pass a test in order to get access to a lot of the products that normal people don't. And with crypto, the normal person can permissionlessly access those things. And that's one of the reasons we want to maintain that and not see all this kind of regulatory fat heaped on, even if it's quote unquote designed for your protection. So anyways, he's talking about describing himself as technology neutral, but he's anything but public policy neutral. Okay, so I don't have a ton of comments beyond that, right? But yeah, I definitely don't want to just see burdensome regulation heaped onto crypto. I think that some regulation is inevitable. I just would like to minimize it and see it, become less burdensome. And some people are saying that this is good, that we're actually getting some regulatory clarity about what they want to do on crypto, because then that lets, projects that are in the space start to see that intent and at least either work around it or accommodate it. Because that's the biggest thing, is you don't want to be building a project in crypto when you're just clearly violating regulations and have to, come up with some way to either undo that, which can be hard in crypto, or change strategies mid-course. Somebody says regulations would mean crypto is ripe for becoming mainstream. I think that's definitely a point here. And like I said, I'm a very realist, and I think that regulation in crypto is inevitable, like I've been just saying. But I would like to minimize it. But I think you're right. That is a good point. That you don't intend to regulate something that doesn't seem like it's gotten big enough to be a problem for you or a threat to you. And also, something that is validation that crypto's gotten big enough to have that conversation, especially at this level. Somebody says Keanu Reeves on here talking to me about crypto. Is he in the chat? Because that'd be cool. I've seen all the John Wick movies, and Matrix. The first Matrix was probably one of my favorite movies ever. Number 2 and 3 though, not so much. Let's see here. But Web3 and Ether's libraries work, call function layer 2's arbitrum optimism. Yeah, I've used Web3 on optimism. It should work. There might actually need to be some upgrades. There's we actually did a lesson on the side of the blockchain mastery program. We have a complete project in there that works on top of optimism. So did you hear the flash bot that he took a NFT punk for 99 way? Oh, dang, I didn't hear about that. If you can put a link in the chat, that'd be great. So it's a good question. So besides, I've got some more news here in a second, but I'm going to answer a couple questions. Somebody says, as a Dapp developer, what's the best way to get users to know about your Dapp? Okay. So crypto is a really unique place, okay, because it depends on what your Dapp does. If your Dapp provides any financial incentive for people to use it, especially for early adopters, then it really can be a build it and they will come type of scenario, okay? If your Dapp is cool and is hot and trending right now, because you can and it can even become semi-viral faster than most applications, because crypto is so rabid right now with people just wanting to find the next new hot thing that can make them some short-term gains for sure. So if you build it and it's compelling for users and you want to get people to use it, especially if it's DeFi related or NFT related, you can literally just go on the warpath with like Twitter and Discord and Telegram and all this type of stuff, just getting in groups where there's other people talking about the thing that you're building, whether it's NFTs or DeFi, and just letting them know about it, okay? And then putting out official announcements, and you'd be surprised at how much attention that can attract, and then actually, get other people to use it. Now, it depends on what your app is. If it's something that doesn't have as much hype around it, that may not be the case. But if you're talking about like something that's DeFi related or NFTs, like I was talking about a minute ago, where people just like really want to get in early, then you have a really crazy opportunity in crypto right now to just do some organic grassroots marketing that way. So I plan on making a new tutorial for Solidity 8.6 using Truffle and Ganache. Yes, so very soon. We got a new coding tutorial coming out, I think on Friday. It's not a full stack tutorial, but it will use the latest version of Solidity. So make sure you subscribe to the channel for that one. All right, so let's talk about, somebody says, what is an NFT? So that's a non-fungible token. So it's like, you can do lots of stuff with NFTs. The really popular trend right now are the collectibles, like CryptoPunks. Any of these projects are kind of hypey right now. So we have more comments on the infrastructure bill. Okay, so this was, we talked about some of this week. Basically, if you're not in America, how it works is, we have we have a Congress, and that's how these bills get passed. Basically, it's a bill designed to improve the infrastructure, raise taxes, all that type of stuff. But what they do is they throw a lot of stuff in these bills sort of last minute, and they bury it really deep into it. So basically, you have a bill that's designed to be about X, but really it contains Y, Z, A, B, C that are somewhat unrelated to the infrastructure bill. Or they'll still justify how it's related, but they'll still kind of put all this extra stuff in there. Anyways, they've shoved in some stuff about crypto. We've seen comments about, wanting to basically expand the definition of brokers that will require people to KYC, like on DEXs or, who are minors, all this type of stuff. And we've seen some people revise that language to narrow the scope to get closer to the spirit of what an actual broker is in crypto. That's been kind of the latest challenge here. But still some comments that I wanted to read from Fred Wilson on this. All right, so he's saying his comments on crypto and the infrastructure bill. So he says he mentioned the infrastructure bill here last week. Continue to be impressed by the way senators in the White House are working across the aisle to get a very big piece of legislation across the finish line. It's not done, but it sure looks like it will get done. He says, as I mentioned in the post last week, there's language in the initial draft of the bill requiring crypto brokers to report gains and losses to the IRS. The Treasury expects this provision to produce upwards of $30 billion in new tax revenue over the next 10 years. I personally have no issue with crypto gains and losses being treated the same as stock gains and losses, and we have been doing that in the USV for quite a while now. But I do have concerns about the way brokers are defined in the context of crypto. It's very it's very different than how it's defined in the traditional financial sector. That's what I was saying a second ago, basically how they've kind of just expanded this definition to include everybody, but it's not really the true spirit of what a broker is. So the language in the initial draft is overly broad, just including all this stuff like miners, smart contracts, when it should just be like, Coinbase and Square Cash, for example. So here's the points, though. So here's good news. The crypto sector has come together to get the language changed in a way that I've never seen before. That's what I said a minute ago. He's kind of saying, like, hey, this is really great. Everybody's able to align behind this common mission to help the space out and really get something done. And they're actually building, making inroads with lawmakers here. And so he's also saying it's also the case that when government decides that a sector is an important producer of revenues, that's a sign that it has arrived. And that's kind of what I was talking about in the previous section of this stream where, this is kind of a big stamp of approval for crypto world is like if they want to tax it and regulate it, like that's a sign that we've seen significant adoption, okay? So many out there think these new regulations are bad for crypto, but I think that they are a bullish sign. Crypto is here to stay, and it is a mainstream industry now, which some people, if you're new to the space this year, you might really take that for granted, okay? But anybody who's been in this space for, I would say, longer than a year, maybe a year and a half, 2, 3, 4, 5 years, realizes how far crypto has come even in the past year or so, because we did not have this type of validation before. We did not have people like beating down our doors, trying to buy crypto punks and use DeFi products. And then, regulators coming and say, we want to levy taxes on this. We want to add regulations. You didn't see Elon Musk buying $1.5 billion of Bitcoin. You didn't see the micro sailors on the front line, evangelizing this. You didn't see, Ethereum taking off like it is today. And, these are all good signs of that. All right, so let's see here. Can I check out Gitcoin and give a review? So I'm not sure which, I don't know if I'm talking about a specific Gitcoin grant. I've done a video on Gitcoin in my past. Yeah, I've done some stuff with Kevin Owaki over there in the past too. He's a great guy. Mastermind behind Gitcoin itself. So a couple of other things we did see yesterday was I'm not sure that many people in this chat will have been involved in Bitcoin Satoshi's vision, but in case you were, it's like that they were undergoing a pretty significant attack yesterday. I haven't seen any post-mortem on this or any other information, but just a quick public service announcement. I put this on my Twitter yesterday. They did undergo a 51% attack. Basically, after an attempted attack yesterday, some serious hashing powers unleashed today at 11:46 a.m. It's, of course, yesterday, and attackers are succeeding. So over a dozen blocks are being reorged and up to 3 versions of the chain being mined simultaneously across pools. So it says plenty of confusion across mining pools after the attack, but the only one successful 14-block reorg since the attack began. Yeah, so it's not good. So what is a 51% attack if you're kind of curious here? So basically, I'm talking about proof of work blockchains. You have, so basically, how does that work? So proof of work is the consensus algorithm for the blockchain itself. So basically, you have these blockchain nodes that are miners that help include transactions in the blockchain. Whenever you send a transaction, it gets mined. It gets included into the blockchain. It creates new blocks that make up the blockchain, okay? So how does it do that? Well, it does it with the consensus algorithm called proof of work. So what is proof of work? Well, basically, that's when the miners compete to solve cryptographic puzzles. Okay, so basically, like there's basically a number that they have to guess, and they have to guess hashes of that number. And the first person to guess it right becomes the winner of this puzzle, and they include the transaction in the blockchain. They get paid to do that. All right, they're basically like renting out their CPU power to help maintain the blockchain, and they get paid to do that. So that's called the hashing power. Okay, basically there's a race to have the fastest computing power that can be competitive as a miner. And so anyways, blockchains become stronger the more people participate in that. All right, it also gets harder to mine when more people participate in that because it becomes more competitive. You need a good cryptocurrency price, healthy cryptocurrency price to incentivize people to do that. Also healthy long-term potential for your cryptocurrency price for people to speculate on future gains. But the whole point is, the more people mine the blockchain, the harder it is, the more powerful it becomes. Now, if you can produce 51% of the entire network's hash power, or 51% of all the computer power of the networks that maintain the blockchain, you can manipulate the chain itself. Okay, so that's one of the reasons I'm a huge advocate of decentralization and having a very strong, powerful, decentralized blockchain. Is because it's the bigger it gets, the harder it is to actually control 51% of the hash power on the blockchain itself to actually manipulate the blockchain. And so that's what happened here yesterday. Again, I don't have all the details behind this. I just saw this out there. It wasn't designed to be like a jab at anybody or any criticism. It's just mostly for people's safety if they happen to be a part of that project. It's like, watch out, you know what I mean? Because looks like they did suffer a 51% attack. Basically, somebody was able to produce 51% of the network's hashing power and manipulate the chain itself. Somebody says, I think proof of work is going to stay around. Well, it's not going to stay around for Ether or for Ethereum because it's moving to proof of stake. Now, there's debates on whether Bitcoin will ever move to proof of stake. Hardcore Bitcoiners will say no. There are some people who think otherwise. We'll have to wait and see. But speaking of proof of stake, proof of work, I saw this as pretty interesting. One concern about Ethereum moving to proof of stake, one of the big criticisms is essentially that it's going to increase the concentration of ETH supply. It's going to basically it's going to centralize the control of ETH to people who have lots of money, and concentrate the distribution of Ethereum or Ether around people who are just running validators and staking. So I saw a pretty good point about this yesterday from Chris Berniski, where he says concerns about proof of stake concentrating capital are greatly ameliorated if the initial distribution goes far and wide. So proof of work is a great way to get that far and wide distribution before switching to proof of stake. So ETH, Zcash, who's next? So the whole point here is Ethereum actually has a benefit toward decentralizing the supply of its cryptocurrency because it started out as proof of work. So what do I mean by that, and what's the benefit here? So basically, if you want a blockchain to be sufficiently decentralized, you want everything about it to be centralized. The number of nodes in the network, the supply of the cryptocurrency, all this type of stuff, okay? We're talking about the initial supply of the cryptocurrency. It gets harder to basically, it gets harder to ensure that the supply gets decentralized if you just start off as a proof of stake blockchain where everything can be highly centralized, okay? But if you start off as a proof of work blockchain like Ethereum did, where when Ethereum started, and it's been around for 6 years now, when it started, basically anybody could have run a miner like on a normal computer, right? And they could have gotten some ETH for basically nothing. You could have purchased ETH for cheaply, even once ETH graduated from the simple consumer hardware competitive mining advantage, it was still easier for people to come in and mine it, to participate in that. We had lots of time for the supply to become widely distributed before switching over to proof of stake. And that's what he's saying here. So Ethereum spent a long time in this phase before it's going to proof of stake, and that'll actually help the decentralization for the network once we turn proof of stake on with the merge. So when is that going to happen? So that's going to be when Ethereum 2.0 phase, I believe 1, gets merged into ETH that we use today. So Ethereum 2.0 is the new improved version of Ethereum. That's when proof of stake turns on. It's a separate blockchain being built right now. If you're using Ethereum today, you're using Ethereum 1.0, and whenever it's being built in phases. And so the next big milestone on that roadmap is to actually merge proof of stake into Ethereum 1. You kind of think about it being like Ethereum 1.5 at that point. And that's kind of the next major milestone. Someone says staking is so much more easier and successful. 100% of the time, proof of work can cost you money on electric bill if you don't produce a successful block. Yeah, totally. Now, the other criticism of Ethereum proof of stake is that 32 Ether is the minimum required, but that's going to be too expensive for most normal people. And even if it's not too expensive, most people don't want to just lock up that kind of money into a computer. So you see other blockchains coming out like delegated proof of stake as a solution. There's criticisms of delegated proof of stake as well. We've seen failures of that in the past. But yeah, I'm excited for this transition. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a massive shortcut entirely, I can show you how to become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.